orthodoxy. Welcome to the Money System, where we explain how money really works.
Are you worried about another global financial crisis? What if I told you there's a ticking time bomb in China's economy that's 3 times larger than the Evergrande crisis we all heard about? This isn't just about a single company. It's a systemic issue that could have ripple effects across the entire world, potentially impacting your investments, your job, and the global economy. Stick around, because what I'm about to reveal is something the mainstream media isn't fully covering, and you need to know about it. Let's start with a quick refresher on Evergrande. Remember them? The massive Chinese real estate developer that sent shockwaves through the market when it defaulted on its debts. It was a huge story, with over $300 billion in liabilities. People were panicking, thinking this was China's Lehman Brothers moment. But here's the scary part. Evergrande is just the tip of the iceberg. The real problem is much, much bigger. We're talking about something called local government financing vehicles, or LGFVs. Now, I know that sounds like a boring technical term, but trust me, this is where the real danger lies. What are these LGFVs? Essentially, they are thousands of separate companies set up by local governments all across China. Their main purpose is to borrow money to fund infrastructure projects, things like building roads, bridges, railways, and entire new cities. Why do they exist? Well, in China, local governments are officially restricted in how much debt they can take on directly. So, to get around these rules and fuel the construction boom that has powered China's economy for decades, they created these LGFVs. These vehicles can borrow massive amounts of money from banks, bond markets, and shadow banking systems, all without it appearing on the local government's official balance sheets. It's a clever but incredibly risky workaround. So, how big is this problem? Estimates vary, but many economists, including those at Goldman Sachs, put the total hidden debt of these LGFVs at a staggering $9 trillion. Let me say that again, $9 trillion. That's more than half of China's entire GDP. To put it in perspective, Evergrande's $300 billion debt is just a drop in the ocean compared to this. The LGFV debt pile is 30 times larger than Evergrande's. It's an astronomical figure that's hard to even comprehend. Now, you might be thinking, okay, it's a lot of debt, but what's the actual problem? They're building useful infrastructure, right? Well, that's where things get complicated. For years, this model worked. China was growing at a breakneck pace, and these infrastructure projects seemed like a good investment. The borrowing was fueled by a red-hot property market. Local governments would sell land to developers like Evergrande at high prices and use that revenue to pay back the interest on the LGFV loans. It was a cycle that seemed like it could go on forever. But now that cycle is breaking. China's property market is in a deep slump. New home sales have plummeted, and property developers are going bankrupt left and right. This means local governments are no longer getting that crucial revenue from land sales. Suddenly, they're finding it incredibly difficult to make the interest payments on that $9 trillion mountain of debt. We're already seeing the cracks appear. All across China, LGFVs are struggling. Some are missing payments. Others are desperately trying to restructure their loans. In some poorer provinces, the situation is dire. They're cutting public services, delaying salaries for government workers, and halting new projects just to stay afloat. It's a silent crisis that's brewing just beneath the surface. Think about the consequences. If these LGFVs start to default on a massive scale, it would trigger a chain reaction. First, the Chinese banks that lent them the money would be in huge trouble. This could lead to a credit crunch where banks stop lending, starving the entire economy of cash. Businesses would fail, unemployment would rise, and China's economic growth, which the world has relied on for so long, could grind to a halt. But it wouldn't stop at China's borders. China is the world's second-largest economy and a major trading partner for almost every country on Earth. A severe economic downturn in China would immediately drag down global growth. Demand for everything from Australian iron ore to German cars and American soybeans would plummet. Stock markets around the world would likely tumble as investors panic. We could see a global recession that makes the 2008 financial crisis look like a minor blip. The Chinese government is, of course, aware of this massive problem. They are not standing by idly. They're trying to manage the situation, forcing banks to extend loan terms and encouraging local governments to sell off state-owned assets to raise cash. Beijing is essentially trying to defuse this time bomb slowly and carefully, without causing a massive explosion. But the question is, can they succeed? The sheer scale of the debt is immense, and the tools they have are limited. Bailing out all these LGFVs would be incredibly expensive and could create its own set of problems, like soaring inflation. Plus, the fundamental issue remains. China's old economic model, based on debt-fueled property and infrastructure spending, is no longer sustainable. They need to shift to a new model driven by consumer spending, but that's a difficult and slow transition. So, what does this all mean for you? First, it's a major risk factor for the global economy that you need to be aware of. If you have investments, especially those with heavy exposure to China or global markets, this is something to watch very closely. It highlights the importance of diversification in your portfolio. Don't put all your eggs in one basket. Second, it's a reminder that economic headlines can be misleading. While everyone was focused on Evergrande, the much larger, more systemic risk was hiding in plain sight. It pays to dig deeper and understand the underlying forces shaping our world. This LGFV crisis is the biggest challenge facing China's economy today. It's a complex, slow-moving story, but one with potentially huge consequences for all of us. Whether Beijing can successfully navigate this debt minefield will be one of the most important economic stories of the next decade. It will determine not just the future of China, but the stability of the entire global financial system. We LLB keeping a close eye on this developing situation and will bring you updates as they happen. It's a critical issue that deserves more attention. Thanks for watching. If you found this video informative and want to understand the hidden forces shaping our global economy, make sure to hit that like button and subscribe to our channel. And don't forget to ring the notification bell so you never miss an update. What are your thoughts on this hidden debt bomb? Let me know in the comments below. See you in the next video.
So, we're not smart. If this helped you understand the system, subscribe, like, and share this video.